Good morning. This is Larry McMillan with a stock market update on Monday, October 31st, before the market opens. Happy Halloween if you're celebrating today. Um, the market rallied pretty strongly again last week, especially on Friday, and closed at a new relative high for this current move upwards, which began in mid October. It's pretty strong, and it has a chance to go much higher. I think if it can get through resistance here in the 3,900 area, it could begin to challenge the 200-day moving average, which is declining and is at the 4,100 level. Also, the downtrend of the bear market is in about that same area. The McMillan volatility band buy signal remains in effect, and its target is the +4 standard deviation modified Bollinger Band, which currently is at about 3940 and rising. So things are looking a little bit better. We have quite a few buy signals from our secondary indicators. However, this is still a bearish SPX chart, and so a core bearish position is still warranted, but you can, of course, trade these other signals around that. The equity-only put-call ratios remain on buy signals as they continue to decline. We also had mentioned that the total put-call ratio gave a buy signal. That buy signal is now not in effect any longer, since SPX has risen more than 100 points since that signal was given, and that is the target for the total put-call ratio buy signals. But the equity-only buy signals still remain in effect. Breadth has expanded pretty nicely, especially in stocks-only terms, and the breadth oscillators are on buy signals and they're in overbought territory. Being overbought is not a problem when the S&P is in a new upward phase, and since we're only 2 weeks into this one, I'd still classify it as new. However, we're paying close attention because if breadth does turn negative again, then sell signals could occur. But right now, that's not the case. There were 85 new highs on the New York Stock Exchange on Friday. That's the most we've seen in quite a while. If that number improves a little bit more from here, we could get the first buy signal from this indicator since last March. But right now, we don't have a buy signal there. Where we do still have a buy signal, though, is in the spike peak of VIX. VIX continues to trend downwards, and that's generally bullish for stocks. In fact, VIX closed below its 200-day moving average, and that is on the verge of stopping out the trend of VIX sell signal that's been in place since mid-September and got off to a very strong start, but now, of course, is weakening. So if VIX closes below 2640 today, that would cancel out the trend of VIX sell signal. It's not a trend of VIX buy signal, though. It just cancels out the sell signal. Finally, the construct of volatility derivatives is bullish in that the term structure of the VIX futures is sloping upwards in the front end. Although the CBOE volatility indices are just putting you on alert that there's going to be volatility based around the FOMC meeting this Wednesday. I'm sure we all know that, but the options are reflecting that as well. And so it could be either upward or downward, though. It's not necessarily a negative indicator. Overall, we still are, as I said, maintaining that core bearish position. We have a lot of bullish positions in place, which we are trading. And the October seasonal buy signal went into effect on Friday's close, or actually Thursday's close, I'm sorry. So it benefited strongly from Friday's action. And it will terminate this Wednesday, so that's a short-term signal. But that is usually a pretty positive signal, as institutions tend to buy near the end of October and in the early days of November. So I invite you to visit our website. There's a lot of action in these indicators now on an almost daily basis. And the best way to keep up with that is to subscribe to our daily publications. Meanwhile, have a great week trading.